Hello guys, welcome to the Trading Parrot and welcome to another episode of Sunday Alpha. If you have missed any of my videos during the week, this is the video that you must watch before starting with the week. And not just that, before we end the month of February, this is information that is impossible to miss to take any decision, whether it's for trading or for holding, investing. We're gonna cover everything. We'll cover the socials, what's next in the economic calendar for the week, a few news that are important, how liquidity is progressing towards bringing new liquidity into crypto, some disappointing news about the aggregated open interest, news on the hash ribbons, and of course the 4-hour and daily time frames. We got one very strong signal that I want to share with you as well on the daily. We'll try to decipher what the hell is going on with the weekly time frame. CPR must have given us in here some slap in the face. I want to cover that. I'll give you my take on the closing price of CME on Friday and what I'm expecting for the beginning of the next week. And since we are just 5 days away from ending February, I'll need to touch base, unfortunately, on the monthly time frame as well. This includes the Stochastic RSI on the monthly, but not everything is going to be bad. I have some good news as well of what the big whales are doing currently, which is really shocking to see while everybody is running in panic. And of course, we're gonna end the video with all the liquidity and what really matters for the short term, levels of liquidations, and the usual daily order book surgery, which everybody loves in the channel. We'll dissect each and every chart to see what the hell is going on from every angle. Guys, if you like this type of content, make sure that you're subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. And I'm still in a quest to get over 1,000 likes in a single video. And I'm hoping that the alpha this Sunday is heavy enough and strong enough for you guys to hit the like. Of course, if you are a hardcore fan, you're welcome, more than welcome, to hit the like before listening to the alpha if you give me your vote of trust. A comment, really appreciated, and sharing the video with your friends, well, what can I say? Pure love. Let's get started with the socials. I got new developments in here. If you guess it, good for you, because that's been the trend since November, where we just see lower lows and lower highs in interest in Bitcoin on Google Trends, which is completely the opposite direction that we took at this time 4 years ago in the previous cycle in 2021. Around November, we had the last depression and then we went parabolic in interest on Bitcoin. And that is driven by retail. And I'm expecting that the liquidity that is coming now into crypto and into the macroeconomy, that divergence against this trend on socials is eventually going to catch up. And what I mean, retail actually noticing that some liquidity is coming into their pockets. I suspect that that is still not the case, and that's why they are not looking yet for Bitcoin. Another argument could be that we are still very close to 100k, and even if they have the cash, some of them might be thinking, maybe I already missed the train, so I might as well wait a little bit longer and let institutions do their thing and continue to accumulate, in which case they might enter on this, but only once we start a bullish breakout. In a similar way to what we did in November this year, once we exit from the 8 months megaphone pattern to the top, that is where retail moved from below 20 to 65. They love getting ripped. They love entering once the rally already started. Retail doesn't like to get golden entries. They really hate to enter at low prices and to make profits. But that's why you're watching this video, to not act like retail, to step up your game and to become part of the smart money, or at least use data-driven decisions to spot really what's going on under the carpet and not end up being spit in the face again by smart money once they take profits distributing into you. And this is how it looks next week, starting from Monday. We got a lot of meetings as usual. On USA, we have the growth rate, durable goods orders month on month. We got growth rate on many other countries as well. We had the core PCE price index on USA and personal income, personal spending. On China, we have the manufacturing PMI, but that's on Saturday, 1st of March. If you haven't noticed, guys, I've been for around a month, thanks to the help from my team, summarizing on a daily basis, 90% of the time, the videos that you're watching. You get them straight into your email if you sign up to my Patreon down below. That is just £10 a month. It is a lot of work, but it's also helping me to keep track of things. Like, for example, there are articles where I share the entries that I mentioned in some videos. So if you appreciate some convenience to have that delivered straight to your email, sometimes with screenshots of the charts and the setups, and my views and summaries of what is bullish currently, what is not bullish, so you can catch up when you miss the videos, and that also supports the channel. It helps me getting also to be able to pay to someone to edit my videos and to put out more videos, so all of this ultimately goes back on a win-win to you as well. So if you don't mind signing up to my Patreon, links are going to be below. You can see this is an example of the past video. You can just have a look now and see if this is something that you will appreciate. It includes my entries and every single move I make. I don't trade very often. If you haven't been watching my videos for very long, do not expect every day to give you an entry, because I'm not scalping. I'm doing swing trades and I wait for really great entries. If that's your thing and you're not itchy to enter every day, then this might be the thing for you. And when it comes to news, I think the loudest one at the moment is the case with the Bybit hack. There are some discussions on the CEO possibly getting a rollback of the $2.5 billion. At the moment, there has been withdrawals from the exchange for over half of all the assets that Bybit was holding prior to the hack, which is just mind-blowing, and it puts definitely the exchange in a big risk. At the moment, they are having to rely on third-party loans to be able to tolerate the issues, and that is something that definitely doesn't sound anymore like an exchange that I can use to put significant amount of funds. Of course, if I want to trade just because I like the platform, which I do, I can always deposit a small amount and use leverage for some swing trades or for some scalps, but I'm no longer going to put anything near to 10% of all my capital in the exchange, and I do that as a public statement, so it's very clear. I'm also no longer going to promote it. I want you to be aware of that, so that's official. One of the main things that worries me is not just the exchange, but the method that was used to hack, which should be freaking out everybody out there, because this method is either the strongest I ever heard to scam someone, or is complete BS and they did it with someone internal doing this thing. One or the other. But if it is the first one, it means literally that if they compromise your computer with a Trojan or with a virus, they can alter the UI to get you to believe that you are doing what you are intending to do, but instead of that, they are injecting into your wallet a contract that hands over the wallet to the attacker. But when you are looking at what you're signing, when you accept, it will tell you that you're sending the assets to the correct wallet and the amount is correct as well. So there is no way of ensuring that you're not doing the wrong thing and being careful. The only way is basically to detect whether you have some virus or Trojan. And here's the thing, they couldn't find anything, which leads me to think that is maybe the second one. Maybe there is someone internal, because there has to be something in that computer that shows that there was a virus or something. Otherwise, how they manage to compromise not just one, but 4 signers? That is just mind-blowing, and it leaves me almost shaking whenever I need to do a transaction, because this affects also cold wallets, not just warm ones. So even if your private keys are out of internet, if they affect the UI and they get you to sign something, that thing will look just perfect, and then you will say, okay, that sounds good to me, and then you gave your whole wallet to someone else. Really freaking scary. They also think that Lazarus Group is behind the attack, so it's gonna be an interesting week, particularly if we get good news and they get the funds back. And I think even if they get in a good situation, this stress test that they are going through, the fact that losing 1.5 billion, which represents just 10% of all the assets they are holding, the fact that they still need a loan to balance things out just with that amount, that is quite scary. It is the largest hack in history. People call it like that in social media. I understand and everything, but you know, my money and my security first, so I'll move to other exchanges. Easy. Okay, let's go back into liquidity and the news from last week. I'm gonna go very quick. If you want full detail, watch my previous videos during the week where I cover this in depth. The executive summary for you, my executive friend, is that we have potentially on the Federal Reserve a higher low in here with 2 consecutive weeks going up after the double bottom. This is pointing in the right direction of more liquidity coming in the system. Global 2, M2, both charts, both versions I have confirmed the double bottom formation, similar to each and every single event in the past that we have from 2018. We are looking now for a higher high, just above 108.5. China has been increasing their liquidity, but not in the way that people are putting it out this week in Twitter, where they say or claim that liquidity has doubled in China. That is not true. That is just a new calculation that has been published, or how they calculate the total liquidity, that makes it look like double, but it's not. It's just a new calculation. In this calculation in here, you can see that it hasn't increased that much. We are still in a descending hill in here. Hopefully very soon start to increase in this direction. We have seen some unsettled candles during the week going up, but you can see that they settle at 52, so it's not really that much that they are increasing. And liquidity in crypto continues week by week, increasing very slowly, not at the fast pace that we saw from October into December last year. I'm still looking for something like that, and as long as this increases, it's positive. But in order to have a proper altcoin season, where it's not just a fight of cats and dogs between the different projects to get the liquidity for at least 1 week before selling out again, we need a big spike in liquidity around that area. And not so good news, I will say slightly tilted now to the negative end, is what the open interest has done in the aggregated version. This covers the open interest of all the exchanges from the website coinalyze.net, and you can see that my setup in August for exiting from the top of the bull flag created the liquidity hunt in August. It did a retest of the support area of 15.7 billion in September, 1 month after going to the mid of the range. If we focus on what we are doing in here, it's a completely different story. Number one, we did the liquidity hunt, we reclaimed, then we lost it again. Okay, that one we let it pass because we did something similar on the 12th of August in here. So that is very similar to what we did on 17th of February. Then we went beyond the mid range in here, and that is fair enough to 31.5 billion. But with the hack on Bybit and with the retracement of the S&P on Friday as well, we clear out the open interest from 31.58 billion back into the final support at 28.6. So we are now pending from a threat there to completely spoil the pattern. You can argue that now this is a double bottom instead of the higher lows that we had in September in 2024, and that can still recover. But in my opinion, when you do a liquidity hunt, if you do it again, it needs to be a higher low and not the same low as the initial, because that is shouting weakness. The price is still holding with the closing levels in here. It is kind of putting an inverse head and shoulders. One shoulder is at 96.5, then the head is at 95.4, and then the next shoulder is at 96.3. So it's very sideways. It's not an inverse head and shoulders, but someone is gonna say that. I think we need now to let this one rest for a bit. If I see something that looks like it's reverting again into something bullish, I will let you know. Otherwise, I won't cover this chart as an alpha anymore. And we continue to be in the red in February at 5.84%. Hash ribbons hasn't printed a buy signal yet. I thought we were going to print it right after this mouth wide open with the move up into 99.4, but that just contribute to closing the mouth again, so we continue to go sideways in the maze of hash ribbons. This indicator covers miners capitulation. Indeed, the signal of capitulation was on the 4th of February. We got a green one thanks to the bullish cross. That is great. That prepares us for the buy signal. It's got high accuracy and performance in the past. So we will continue to monitor that until we get a buy signal. Bear in mind that there can be another bear signal. There are multiple times in history where we do 2 consecutive capitulation signals like we did in May in 2024, or even in here in the last one before we had the buy, we have also a bear cross in October again, and that gave us 2 capitulation signals before the buy in mid-October. So going back to the 4-hour, this whole trading range with no exclusions has been a disaster for a strategy with RSI, and that is because the range just continues. The breakdown didn't continue down, the breakouts didn't continue up, they just come back inside the same price range in here. This is a paradise for a grid bot. If you knew at this point in here to deploy it at the very low and betting that it's not gonna put lower lows, then is the best one, and you exit at 99, perfect. You made more money than most of the people trading in this range, especially if you put it with a 2-3x, and assuming that if it exits from the bottom, pretty much will be a complete loss. Where are we now on the 4-hour trading range? Very simple. If you exit from the top of a range, the strategy says that if we come back inside, then you win yourself a journey to bottom of the range. Sometimes, like in this case, you first hover in the middle for a while. Sometimes you kind of go as a resistance to the top if we're coming back down. There are different shapes of this, but ultimately it's got a very good ratio of success as long as you enter in the area of the breakout aiming for the opposite, right? So you enter in here, or once you reclaim this and then you go to the other end target as a target. And it's been playing out pretty well. That particular strategy, that is not the one I'm using. I call it a scalping strategy, and I explained that I don't have time to with my daily schedule to really do scalping. That's why I focus on the 4-hour. You could trade this even on the 15 minutes if you wanted. And the last time was on the hack on Bybit in here, where we made it all the way to 99.5. We took half of the liquidity of the short term at the top thanks to this move being so high relative to all these highs from early February, and that immediately went all the way to the bottom of the range. It bounced off from there, and now the risk, guys, and what we need to be looking for is whether this move in here is just going to be a dead cat bounce, and we can calculate it taking the whole move down from top to bottom, that initial sell off, and then speculate how high is this price gonna get. Let's say it hits that resistance somewhere in here, that I'm just speculating, but imagine you get to there, then you can take this length and place it like this and then calculate a target to the lower end. If you did something like this, you will perfectly continue with this trend from this line 1, 2, 3 and 4. So that is not crazy to think that could be the setup that is about to unfold for the rest of the week. So let's put it on the table, let's think about it now, let's not forget it, of course, and let's challenge it. That is the next step in my method. So how can we challenge this? What could go well in here? Basically, that you enter on a short and you get squashed all the way up. Well, we exit from the bottom in here, so we have done already a full move to the bottom of the range on the 4-hour. So this guy in here is shouting, hey, don't forget about me. I'm saying that I reclaimed this and now we could go to the top of the range. And indeed, it happened with volume above the moving average of the volume, same as these two did it with big volume when coming down. So it is a confirmed reclaim in there. So unfortunately, this is a very delicate situation. And as I explained yesterday, it is one of those trades when you have that 50-50. And remember, you don't have to trade everything. You don't have to enter on a weekend. You don't have to enter on a Monday. I mean, those are challenges by itself. And together with the current situation, which is just being at the middle of the range, we're gonna do the surgery in the rest of the video to see if there is some alpha that leans towards one of the two cases, okay? Because so far we get two good narratives, reclaiming range and dead cat bounce, and I'm sure many traders at the moment are thinking the same and they are having to make that decision. On the daily time frame, I forgot, but on Thursday we had a bullish cross and we haven't undone it on the daily time frame, not even after the hack. You can see Friday, Saturday, and now is Sunday. The MACD is still open in here. It is very small, the momentum. We haven't started to increase with big dark green candles in the histogram. But on the daily, we have some things, again, that are bullish and some things that are bearish. So we're going to continue to stack those things until we find an actual bias. Something that is bearish. Well, we went to the top of the range. We pinched the top of this widening symmetrical triangle and we saw a rejection more or less when we met with the RSI 56, which is this brown line, and the top of the triangle. That rejection at the perfect time. It's almost like I said in one of the videos last week. Now we're going all the way to the top. Be careful. Don't assume we're gonna take all the liquidity at the top. We might just take the first chunk. Be prepared for bearish news because there are interests in the exchanges to keep the price contained for a longer time. And I've seen, after I say that, I don't know if my Google Home devices are listening, but I was offered on YouTube some videos and some evidence that people have towards that narrative of exchanges or other big players not wanting to cross 100K yet. So when we got to 99.5, suddenly Bybit had a hack, and then next week they are talking about reverting it. So very good timing, guys. Well, you could say, well, the S&P as well. Well, maybe those those interests are not just for Bitcoin to stay below 100, but maybe also to keep the S&P from producing new all-time highs. I mean, I really don't know. This is just speculative thinking. Let me know what you think in the comments. It's okay if you think it's bullshit. You know, it's a Sunday morning and I had the right to share my ideas in my own YouTube channel, don't I? On RSI, here's the things that are good, okay? We went all the way to the range at the top. We are bearish with that. That threw us back down just to 94.890. We haven't gone to do the same to this widening triangle. We haven't gone to 93.7. In theory, let me remove the previous target, which we already did by the dollar. Let's go back down now. Let's imagine that this comes now here and it goes to 93.5 or 93 and it puts a low somewhere in here, okay? Or it even breaks down below the triangle and finally we exit when we hit the global bottom of the range on the daily time frame. Let's imagine that. That is the bearish thesis. But the RSI on the daily thinks something different. The RSI says, I spent enough time at 42 and I'm done with this. I'm gonna break out against this line, and during the sell-off of Bybit, it decided just to come for a retest at 44.88. That's pretty much 45. So that's a higher low on the RSI and is a progress towards the global resistance of 55. So RSI hasn't taken yet a bullet. It will though if we break 42 and we start coming back for a global reset. A global reset is what you're watching, guys, in here is the daily of RSI of the full bull market, including each channel to the upside 1, 2, 3 and 4 and each reset to the bottom. So looking at this, if you've been watching my channel for longer than 3 months, when you see this, you shouldn't see lines. You should see the matrix, things moving around, objects that get duplicated and stuff like that. If you get there, you're getting close to what I see when I see this. I see the potential for a reset at 31, at that red line. I see that the PNR we have already reset. The percentile has come to touch base with the RSI, so we got a 50-50. We already did this. We could go to the next resistance. We are putting lower lows. We had that on the table. It's not discarded. So I should be in a long, but unfortunately, if you missed my video yesterday, I had to close it on Friday to take out my assets from Bybit. I wasn't lying when I say I'm using Bybit to trade and I had to extract it. So, you know, what was bad from that exchange was bad for me and for you. When I told you I used the exchange, I wasn't lying. And the second thesis is that PNR is not enough and we have to go for a global reset at 31 and meet with the price of 89.3. We got the bullish cross on the MACD. We got the RSI that is coming back to the top. The MACD cross is from below the zero line. So we got those two things saying momentum is starting to grow and to flip to get out from the red in here. You see the cross of the histogram, you see the bullish cross, and you see the RSI breaking out and pointing towards global resistance. But at the same time, the price took a hit and below the point of control. On the weekly time frame, we have this candle of indecision on the bearish side of things. We were crossing towards the bullish area during this week, but we are about to end the week back into the bearish end of things. We have here also on the weekly a stochastic RSI that wants to do the bull cross, but is with the mouth open at the moment. So it will require the price of Bitcoin to push higher, potentially to where we were, maybe 100K to get there. And the RSI is at the bottom of the channel, and I'm still calling for eventually this becoming a pivot. It was looking very well like a pivot earlier this week, but it became flat again thanks to the sell-off. But we need to eventually do a rally against resistance, and that's why I should be looking for a long now. CPR did terrible in terms of seeing a rejection, but it did amazing by calling the resistance. These are the pivots starting from 99,472, and you can tell how accurate the resistance acted. Like the timing of the news were precisely there at the resistance, and it pushed back down with an engulfing red candle, all that price action on the 4 hour below the neckline. So this pattern is completely invalidated. CME prices, we close at 95,065. That's CME premium price, but on Binance that is 95,353. Price has been doing the opposite that I wanted. Basically, price has been coming closer to 97k, and if we close tonight like this, we will create a CME gap to the downside. So that means that we could be erasing this progress towards 97k, and that is pretty inconvenient, to be fully honest, because at 97 or 96,976 is where we have the point of control. Lots of volume trading. That is the middle of the range. You can see it in the histogram, and if they turn bearish, that means that we have a huge resistance there from the CME bringing us back down, from the point of control being a strong resistance. You could also argue that even if it's a strong resistance all this period, we did nothing apart from crossing it. So that theory that is a strong resistance these days have not been playing out. And we are 5 days from the plan A, which I explained it's to do with being above 70 on the RSI monthly. This linear regression of 400 days, 300, 200 and 100 days. By end of February, plan A says that we have completed the 92 days above RSI 70. It's really such a greedy period really in here. It sucks because even though it's 100 days, we didn't even touch the resistance. We were just hovering at 70, 71, 69, 71. That's it. It sucks. So it leaves me thinking whether plan B is the one that's going to actually play out, which is you go above 70, come back to 69, and then you have the green period above 70 for many more months, or for, in this case, for 3 months. And if that's the case, the first month will be January, then February, and then you still have March. So you have plan A, where February is the end of RSI being above 70, and you don't want to be in the market for that. And plan B, which is we still have up until March to do good things. We also have on the monthly this bearish cross that we have 5 days to undo it, and we need to go to 101.5. That is my opinion of how high the price needs to go. That is thanks to this new version of Stochastic RSI that I call the forecast version, which is now available as well to Patreon members. You can see my article called Many Longer Terms Signals About to Trigger. If you scroll down, you're gonna find the SRSI forecast Pine script. You just copy that into your TradingView account in this Pine script editor, and that's it. Okay, some good news, some hopium coming up in here. This time is coming from the Big Whale Explorer. You can see a big drop to 0.18. That 0.18, we haven't had it since October 2020. That is crazy. And this is saying basically that withdrawals from exchanges from large holders have spiked. Now, this is a stochastic view, and it helps me visualize that ratio between withdrawals and deposits. So to me, green, good, red, bad, simple, right? But let's see the actual data, the source. How much of outflows do we measure in here? We have a 20,000 in outflows from into the block, and the same day we have 3.98k of inflows. So that is a big delta, not as much as we did on the 4th of February, where the delta was 70k towards deposits. In this case, there's a delta of 16k towards withdrawals, and that indicates something bullish. Now, let's think, why is this happening? Why do we have 16,000 withdrawals? And going to Friday, we have the attack on Bybit, right? People were extracting, and many of these people are large holders, big whales. And this indicator focuses on them, and they are here. So ladies and gentlemen, I feel like this is coming from Bybit. These are withdrawals due to the panic. Is that bullish? Is that meaning that the markets is reversing? And I have to put the benefit of the doubt now on this. In my opinion, is that these are potentially part of the 70k delta from 4th of March that were depositing. They deposit to Bybit. They were waiting for the time that they can distribute it at higher prices. They waited and waited and waited, and eventually there were these fears of Bybit, the bank run and all of that, and they decided, okay, time to withdraw it to a cold storage and maybe distribute it somewhere else. So no, I don't see it as something bullish, I'm afraid. Neither something bearish, but it's just not what is the typical signal of, hey, they are withdrawing because they're planning to hold for a long time. This time, not the case. Let's look at the ETFs, and we got a continuation of all this bleeding in February, very slow pace, but still worrying me because now it's gonna be almost 2 weeks, the whole February, that they are reducing the amount. Still not big worries because there is a retracement that is even less than the retracements that we have in this period where it's still an uptrend. That depression there is still insignificant to my eyes. We are in neutral and fear and greed index. Cerberus since 2 weeks now is in a warning buy and just pointing flat here at the bottom. This indicator tracks ratios between stable coins, Bitcoin and altcoins, and it gives me the window of where to look for longs. With all this noise, with all the sell-off, S&P and everything, and long-term holders are just rolling over and continuing on this way, just flat, not taking any decision. To me, that is something bullish. Let's go now to the liquidity and the order book surgery. So we took half of the liquidity on the short term on the top end. Some people continue to ask me, what do you mean by short term? This indicator captures the data from order books from Binance. You can also use other exchanges and symbols, as you can see here, and it does have a time window of how long in the past it's gonna track that information. Therefore, these pools that are inferred from that data wouldn't take in consideration areas that are very old. So for example, if I scroll down in here, you can only see possibly up until 60K, and beyond that there are no pools, and that is because those prices, we haven't been there for a long time. I don't know in trading different how long it goes on each time frame, but I suspect that is a number of candles. So if you are in the 15 minutes, let's say it tracks back 1,000 candles or something, only those 1,000 candles are taken into account for plotting these beautiful colors. And I do use the 15-minute chart and the 4-hour, and of course 4-hour same number of candles brings me a lot of additional information that you cannot see really when you use CoinGlass, which states we are only going to take into account 30 days of order book information for BTC. That's why you don't see a lot going on beyond those numbers, but you do here. All right, so we left on the table this heel in there is in red, and we are speculating whether this sell-off could turn into a dead cat bounce from that level and wipe on Sunday or earlier this week all that is in here. So it becomes a matter of measuring this heel versus this heel and acknowledging that if things get more bearish, we still have heels below 89K that are a lot more juicy than going only to 101. If we go to the top, then we start having more on the top end, and this is again a visualization of short term. If we see the heels on the longer term, you can clearly see that the top wins. 125 together with 115 are definitely going to liquidate a lot more people than if we go to 87. You can even put a trend in here and you can see how it diminishes as it goes lower, and hence my bias when it comes to just liquidity by itself. So next week we could move and go and take this area in here. So if we go to this end, we have this trend line that we still haven't touched in a while. We touched it last time on 12th of February, and it will be enough if we start crashing from here. For example, let's say this rolling over started a crash, we could take all of that. If the price crashes from higher, let's say this does just a higher low and then it moves to 97 and it hits resistance there, then the crash will just go straight into 93. I am just measuring the same magnitude of this sell-off and placing it here. That is a valid method that many people use, and if that's the case, it still hits the red. Now if we go beyond that, which I suspect is beyond the golden pocket and the 50%, of course, because 50% is somewhere in here, then we start making it too easy to get into 99. So crossing this point beyond 98 and continuing up creates the narrative of a V recovery in here, and then it's so easy to get that done and complete the job. Now notice that completing the job is just getting into 101. 101, I'm gonna put a blue line in here so you can see where it is. In the longer term liquidity, that is nothing, and even going beyond, there's still almost nothing. It's just this orange in that area. That's just the beginning of the party. The party actually, I will say, starts from 105, that's where you can see it, and it continues with 107 and then 115. Is a disaster for the shorts, and part of the reasons why they may want to contain the price below 100K is because I could speculate that some internals, some people in exchanges, along with funds, hedge funds, funds and big players may have placed part of this short liquidity there, speculating that that is the top of a big retracement to 80, to 60, to 70, who knows, and they do want to take advantage of that. Of course, if the price goes into 110, then things become really sweaty for them, and they're gonna be forced to close at break even, if not as at a loss, depending on how aggressively the price starts consuming this increasing liquidity, which is looking like a great recipe for a short squeeze. You see high, higher high, higher high, higher high, and higher high. Let's look at the 30-day liquidity. So, do we have meat on the lower end to consume? Yes. Is it impossible to go to 93? Do we discard it and just take a long blindly, cover your eyes, take the long, ride it to 101? Nope. Why? Because it's heavy here. You know, it's heavy, that 92, 93. It can allow a V recovery, don't get me wrong, but the risk is present there. So if you're gonna go with all your volume, not a good idea. If you're gonna go low volume from around this area and target the 101, okay, but be very prepared for that downside to 93, 92 if you cannot contain your addiction to trading. And how are things looking in the order book? Let's do some surgery in here. You can tell that on the 21st of February, the longs were at 50. They were getting very close to touch our support blue line in here. When the longs get very close to the blue, you are about to have a top. We talk about that on the day prior to the hack. We were at 99k and I was talking about this, and I was not calling for a top. I was saying the risk has increased from this end, and the absolutely honest answer is to say, well, I was looking to take 101. Now what happened to my order? Where I'm part of the people that close somewhere in here at 98 or something, because at that point, as soon as I heard the news, even before sharing it with you, I just tapped the number, closed the position, and I started looking for withdrawals, and then I started preparing a video that went out minutes after learning about it. I sent also an update to Patreon. I think they got it first. Of course, they are my spoiled people. If I take an action, they will always be the first one to learn, followed by time-sensitive alerts on Telegram, Instagram, and Twitter. And then once I get the video, you will see it in the video. That's the order usually. So although this was calling for selling, that didn't make me sell. What made me sell were the bearish news and the potential bank run. Funding rates are positive. We no longer have big leverage in there, as you would expect after the sell-off. And this rolling over area in here that on the 15 minutes now is looking like a head and shoulders. You can tell that it's in a perfect balance in there. So possibly there is a small battle with low liquidity in the middle of the weekend, with the shorts targeting something like 95.2. And if we hold this pattern, we could be making a move again to 97 and potentially slightly higher, and take the liquidation levels created midday yesterday in UK time. Liquidation levels at the moment, the delta is extremely flat again, so there is no alpha there. There is minus 24,000, which is pretty much saying zero. In the order book in here, last week the whales got pretty excited and started buying all this move up in there, and I started saying that is really positive. At that point, this is the moment of the hack, and you can tell that the brown whales started selling. The orange ones were already rolling over and started to come down before the hack, but that is possibly because they were thinking that that was going to be the top. Some people started shorting before the hack right there, as if they knew something was coming. That is dodgy, but we can again give the benefit of the doubt and think, oh, those are great traders, let's say. And that's where they started selling off. Purple whales, which are these ones from 100k to 1 million, which I love when I see that they start buying into something, because they act as a leading indicator. You can tell that they were involved around here, and then they bought again, but at the moment that the news came out, they immediately closed down positions together with brown, and then brown sold significantly, and that's how we ended everything. We still have that support at 92k and resistance at 96, followed by 100k with 36 million. On Trading Light, you can see that they started also shorting this area on Friday. They moved the liquidity from 101 and they placed it at 99.7. I didn't see that the day that I put an update. I remember we removed one level, but I wasn't there when they placed it back down to 99, if I remember right. At the moment, they're trying to short 97k. That is the new resistance. Fair value gaps, we have the 97.2 that hasn't been completely taken by this move up of the potential dead cat bounce. 100k still there, 104.2, and then we have the 85 on the lower end. Worth mentioning, guys, if you are invested in MicroStrategy, which I had a call with someone in my VIP call telling me I think it might be a great idea to buy MicroStrategy. And guys, look at this. Be careful with MicroStrategy right now. One, we have the symmetrical triangle on the monthly chart, and the month of February now needs to recover with an RSI of 65. At the moment it's at 64, so it needs to recover a full point before it loses monthly support and it produces a breakdown that spans from December 22, 2022. So this sell-off could well play like something like this and then a rally into resistance. That could produce a new high, that rally into the resistance on the monthly, and it could be really profitable if you enter at the pivot. But right here, if it breaks down, that could mean a significant retracement for MicroStrategy. And if you look carefully, the monthly candles, we have 1, 2, 3, 4 consecutive bearish monthly candles on MicroStrategy. Just saying, word of caution in here. I'm not saying sell, I'm saying buy the closing price of February, set up an alarm that RSI monthly needs to be on MicroStrategy above 65.4. If it's not above that, magnify here the chart and see how low it closed below that trend line, because it could be indicating a significant retracement. DXY closed bearish the week on the head and shoulders on the RSI. I'm looking for it to lose the 21 weekly MA and continue going down, and hopefully not holding support at 106.5, which is currently support. Dollar fulfill the initial target of 77 RSI. I'm looking whether it can achieve the 82, which is the final line, the final resistance of this rally into a lost support that could take gold into 3.1k. Hopefully that is the top of gold. VIX is just in the middle of the range, so nothing to say. NASDAQ and S&P both closed with a weekly red engulfing candle after hitting all-time highs and producing bearish divergences. NASDAQ has, S&P hasn't, to correct myself, but it is an area of that you need to take very carefully. Particularly the NASDAQ saw a rejection from our area of resistance of 64. I call for this being resistance and for caution, not necessarily on S&P. If you were watching my videos about general markets, you should be informed about this already, that we were doing just a rally into resistance with the potential to break out, but you can tell that we actually didn't. Resistance won this time. Russell again putting new lows on the momentum, not on the price, so this current support on the Russell at 2.2 might soon be broken based on what the RSI is saying. Google closed at the 21 weekly. Apple has done decently well thanks to the new economic cheaper options of their new iPhones. Nvidia seems to be having a rejection from the 21 weekly. Careful here, careful here. We can still continue with the rally into the resistance of 64. That is at the price of 164. That could put a new all-time high, right? But we are in the context of looking for when is Nvidia going to put a lower high followed by a lower low, swapping now into bearish territory structure. And since this is the 21 weekly and we are now 4 weeks not reclaiming it, this was a reclaim last week, but now we're putting a candle that goes back down, as opposed to what we did in here that we reclaim it at least for 2 weeks. So these guys, careful with that candle, because that could turn into a new structure that goes in the opposite direction. And who cares about Nvidia? Everybody should. Nvidia has had the power to drag the whole market up, and it can drag the whole market down with it, including all the amazing stocks that you see in this list. Amazon is also testing support and potentially putting an M pattern with a bearish divergence. I mean, it's a bearish divergence by very close, because you can tell that these two tops in there are 71.17 and 71.43. So yeah, double top against higher highs on the price. I'm gonna call it a bearish divergence. You can argue argue in the comments. That's actually good for the channel. Tesla losing the 21 weekly. Palantir finally having a decent rejection and putting bearish divergences, calling for a retest of the 21 weekly at $70. The global support on the weekly is at RSI 60, and I've been already calling for this move after hitting resistance there. That is from the previous weeks. So I've been calling to do this and then do a rally if we hold that support of 60. Microsoft also in the territory of bearish divergences. Guys, I hope you appreciate this video. It contains a lot more than I thought I was gonna do. If you want to trade in a great exchange and you can start giggling now, you should not trade on Bybit. I won't trade on Bybit. I'm gonna trade on OKX, and I'm gonna distribute as well my funds into 2 different non-KYC exchanges to reduce the risk at this point in time. OKX is KYC exchange, and they have rewards for $60,000, and by using the link in the description you also reduce the trading fees to a minimum. If you want to do it on non-KYC exchanges and not use VPN and being able to open as many accounts as you want with different emails, then consider Bluffing exchange. By using the link in the description you can even win a Model 3 Tesla car, motorcycle, cameras, Apple watches, and everything that is in here. On 2bit exchange you can claim up to 30,000 in rewards. All these rewards and prices are based on trading volume and deposit size. Thanks so much for watching. I hope you enjoyed the Sunday Alpha. Go and touch some grass, enjoy your family, enjoy your friends. I know we don't have the perfect setup. I don't make the market. I'm not a market maker. I read the charts and I tell you what I see. I hope you appreciate the honest and consistent content, and I hope it keeps you safer and it saves you a bullet for another time. If you agree with that, hit the like, write down a comment, and I'll see you in the next one. Take care. Bye bye.